Thank you for joining me. I'm Alex, and I want to talk about Autodesk today. So Autodesk is interesting for two reasons. Number one is that they make graphic software or design software for 3D designing, engineering, all that kind of stuff. So obviously a very important company for 3D printing, which has kind of become huge lately. And the other reason is that they've become profitable fairly recently after a fairly long time of having quite significant losses. So very interesting stock for both of those reasons, and probably a company that has a pretty good future ahead of it. So current price just under $200, which gives them market cap of $43 billion. Dividend is zero, and I don't really expect that to change anytime soon, especially with how the balance sheet looks and how the profits are right now and have been for the past few years. Current revenue, $3.3 billion. Current earnings, $215 million. Again, coming from a loss of 81 million and a loss of like 500 million, 800 million before that. So long streak of losses there, and finally making a profit. Not significant, but PE 206, obviously not great. For PE 46, that means that they're increasing their earnings like by a factor of 4, which is huge. And obviously with that kind of growth, they could be making quite significant money in the future. Revenue growth doesn't really match up with that too much, but I do expect them to grow revenue quite nicely as well. Total assets $6.2 billion, total liabilities is $6.3 billion, which gives them a total stockholders' equity of negative $139 million. Going in the right direction, but obviously not really fast enough in my opinion. So balance sheet looks absolutely terrible. Really hate that. PE looks absolutely terrible. Really hate that. But it's positive. So there's that. Obviously earnings going in the right direction, revenue going in the right direction. Dividend is not there, which is a problem. But overall, I would say that the future definitely looks fairly good. So for a growth investor, there's not really anything here, I don't think. For a growth investment, you kind of want a huge revenue growth because you can't grow earnings beyond your revenue, obviously. So there is an upper bound there. And I don't expect them to be increasing their earnings fourfold again anytime soon. So I don't think a growth investor will really be interested in this. Obviously, dividend investor is not going to be interested in this. And for a value investor, the balance sheet looks absolutely terrible. The PE is way too high, although the growth indicates that it will probably be in a reasonable range sometime soon. So like maybe 3-4 years. Lack of a dividend is a problem as well. So overall, I don't think a value investor will find this interesting either, unless you're actually going through the 10K and finding things that are interesting, and definitely you need to have a very long-term outlook here. So we're talking 10 years out at the very least. So overall, I would say not necessarily a company you should be buying right now, but definitely a company with potential that might get very interesting in the future. I would probably buy the stock for maybe half the price, to get the PE in a reasonable range, like in the 20s. I think that it would be interesting for me, but for $200, I don't think I would buy it. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.